You know what's wild? Most traders have seen a reversal. They've seen a bounce, and they've even seen a breakout and retest. But they still lose money on all three. Not because the setups don't work, because they never define what working actually looks like before they click the buy button. Interesting, right? Listen, you're reacting to the market instead of responding to it, and that's the difference. And that difference is costing you. Today I'm going to give you the 3 edges I use: the reversal, the bounce, and the break and retest, aka the breakout pullback. It's real entry, exit, and risk to find before every trade is taken, before we even talk about profits. All right, so let's get into it. And hey, by the way, if you've been watching this channel and you haven't subscribed yet, come on, you know the deal. Hit the like button and subscribe to the channel, and let's build together. Now, let's get back to this money, because I know that's what you guys came for. Correct? Correct. All right, now, before I break down these setups, I need you to understand something very foundational, okay? As you look at this chart, obviously we're going up and down, right? Up and down, right? With or without you, whether or not you take these trades or not. But we're focusing on 3 main trades. And since we're focusing on 3 main edges, right? These are the 3 edges, the 3 trades that I'm going to tell you about. That's the topic of subject. You need to understand a philosophy by a guy named Mark Douglas. Mark Douglas talked about his whole career about how the market doesn't care about your feelings. It doesn't care about your account size. It doesn't care about any of that, right? It's an auction. Prices move to find other side of the trade. That's it, guys. Buyers and sellers. Imbalance. It moves to find the other side of the trade, all right? Orders being placed in the market. So when price moves fast through a zone, right? Like right here, really fast. You see these prices here? When it moves fast through these zones, yeah, all these right here, all right? What that is what they call a low volume node, all right, inside of the volume profile. And so you get these moves, explosive moves towards the upside, because you have a thin zone, less volume. Now you see this here, blue and red here, all right? These blue and red bars represent volume. They keep it simple, right? And the most volume controls the most, like either a magnet and or where we could reverse from. So if we're coming from here, catching one of those 3 main edges that we're going to talk about, then obviously, all right, the thin zone matters, because when you see less bars, when it's shorter, that's a thin zone and a vacuum for price. And price tends to do what, right? It shoots up, right? Or shoots down, depending on the structure of the market. So again, when price moves through these fast thin zones right here, it's called a low volume node, thin air. The market didn't want to be there. It was stuttering, searching. So when price slows down and consolidates, that's a high volume node. Now I'll show you that this is a high volume node because it's the highest. And what did we do here? We did what? We consolidated. Right here, we consolidated within this range, okay? Hope you can see the clear picture coming up, right? And see these setups, these type of setups that are very important. Bounces, reversals, breakout, pullback, all right? You know, they're all around you. And I'm giving you the context because I don't want you to, you know, just go into this blindly. You need to understand that, right? High volume nodes. The market found acceptance. Buyers and sellers, they agree. That's your map, all right? That's your map, absolutely. So when you add gamma exposure, now gamma exposure is very important. I'm going to type it in here, all right? I'm going to dive deeper into this for the community, for those who want to know more about gamma exposure, all right? This is what the market makers use in order to hedge the market up or down, all right? So there's a call wall, all right? Make sure to get your pen and paper, take notes, screenshot, right? Record. Go back and watch again if you need to. And remember to smash that like button if you're getting some sort of value already, right? This is what we're here for, okay? So we have the put wall, the call wall, and what they call the gamma flip. You can study these and understand what they mean as you study it in paper trade, so that you can know what are the numbers here for SPY. There's going to be a number that's the call wall. For example, right here on SPY, you know, for example, we're at 737. The call wall could be 740. The put wall could be 730. The gamma flip could be 745. All right, but you want to find these numbers out. and I will show you guys how to do that in another video. But this is important. You can chat GPT it and/or Google it. All right. The point is the three main edges, but knowing this gives you context so you can execute these three main edges. Now, the context still is here. The dealers are going to be flipping. They're going to be going from negative to positive. That's why you see up and down markets, right? Negative to positive. That's what's happening. Okay. And they're amplifying moves, and it starts dampening them. That's often where the reversal lies, when they start dampening the move. All right. Now, the other layer is like iceberg orders, right? So that's like the VWAP. All right. Institutions use the VWAP, and so you want to know where the VWAP is. All right, algorithm orders. All right, we project it here from the midway point of the VWAP bands, and we continue down. All right, that's another layer here in context, right? Not the three main edges, but a layer of context in order to see those, right? So institutions aren't clicking buy all at once, guys. Okay, remember that. They're not clicking buy all at once. That's not what's happening here. All right, they're dropping orders in. That's why price look like it stutters at certain levels, or like they're building or distributing while the retail is tracing. They're just chasing, and so price is just barcoding. All right, moving sideways. That's mostly what happened. Now, this is the context. This is the context, okay? Now, let's get over to the setup. This is edge number one, all right? Edge number one is going to be what? Edge number one is going to be your reversal setups, your reversal setups. Now, what does that look like? There could be many type of reversals, all right? Right here you have what? You have a V bottom reversal. Okay, a V bottom reversal. And what happened, all right? You had a candle, okay? And what do we have? We have, this is the red candle. Okay, we're going to put R inside of there for red. All right, we had a red, and then we had a green candle that came, didn't quite close. Now, the area that I'm using and demonstrating for is right over to the right, that recircle. Okay, so that G for green. All right, so that's going to be what? These two candles here. All right, these two candles here. That's the red, that's the green. All right, this green candle here, the second green candle, it took out both of these candles. All right, that will be the beginning entry of our reversal setup. Okay, this is a bullish reversal, by the way. G for green. This is a bullish reversal, by the way. And so an entry would be price breaking above this high and this high. That would have been my entry. Now we could have found another trade here. Now we are on an hour time frame. We could have found a trade within a trade on a 5-minute chart, right? Because price left from 722 all the way to 730. That's an $8 move, all right? But for the sake of this time frame, all right, that breakout and reversal trade, it comes from right there. This is just an example of one of the trades that I'm mentioning about a reversal trade. All right, the reversal is one of the most seductive setup trading in trading. It's a seductive setup. All right, and it's the most dangerous one if you're undisciplined, of course. So here's how to think about it. Price is coming into a known structural level, a prior higher time frame. Right, we're on the 1 hour. A high volume node and a VWAP reclaim zone. We talked about these in the beginning, right? Our foundation or gamma level flip, all right? That's what happens. And the market has been here before. That's a memory here. So my process begins to be very clear as I'm thinking about this, all right? My thought process is price coming in with the momentum, or is it grinding in? Is it grinding in? Grinding equals like more conviction for the reversal. Is it grinding? Is there a wick rejection, right? Is there a wick rejection? Any hints here you guys can see? You know, right here. What do we have here? We have a wick rejection, right? That's a reversal. That's also a reversal from the top side back to the downside, okay? If you thought that was something, we also have another one here. It's all around, all right? Remember, we're talking about reversals, entries, all right? That's a wick right here, this wick, right, long wick, right? That's what we're talking about when we're talking about wick rejections at these levels, all right? Single print rejection equals thin zone. Low volume nodes above or below, all right? That's what that means, is low volume. And anytime there's low volume, we have volatility spikes, all right? And the market tends to go, accelerates in the opposite direction depending on where you get the rejection, all right? Ask another question. Thought process. Are dealers starting their hedge the other direction? Got to know what the gamma is at. All right, they're dealing. This is the casino here. All right. Another thing to think about: is there an iceberg order absorbing at this level? All right. If you're watching the tape, if you're a tape trader, all right, you want to watch level 1, level 2. This will be the things you're thinking about. Price stops falling, but selling pressure is still there. Someone's buying, right? When the volume doesn't add up with the price move, all right, there could be some sort of divergence. So the entry, I don't buy the first touch, right? I let the price probe, reject, and show me a confirmation candle, a strong close away from the level. That's my entry trigger, okay? Away from the level that I want, all right? So for instance, okay, let's take all of this off of the chart. For instance, we're going to be using this example before we move on to the other two trades. This one right here, okay? Let's say that I seen this move down here, right? This move happened, right? We have this move down, and I missed this trade, and I wanted to wait for some sort of higher low, which will be one of here, right? Right? We consolidated within this range here, and I wanted to find an entry because I knew that once price could possibly reject, because we're in a downtrend, price is rejecting. If we're in a downtrend and price is rejecting from right here, then I want to try to catch an area because I'm knowing that if we reject, we could fall back a little bit lower. So I want to get it away, the furthest away. And so once I got my wick, right, remember that wick we got, that wick matters. Okay, we got that wick here. Okay, that wick, right? We got that wick, and so that's our entry right there. You're right. That's a strong close away from the level that we're looking for. It's a rejection right here at the 21. Okay, price failed to go towards the upside here. All right, what's my exit? All right, my target is the next high volume node where price found acceptance before. All right, not a random number, but a level the market agreed on. And what's my risk? My stock goes below the structural low or the structural high, but depending on what trade I took, right? And so my high here would be here, stop below here. All right, and my target again, all right, my exit would be at a high volume node. So if we throw the volume profile up here, we can see where. Okay. High volume nodes are all right here. Price drops. Remember I told you the volume, the bigger those bars, the more the volume is. The one is right here. We stopped in this area here and we continue to bounce. Now this is the SPY right now happening on the 6/9/2026. So I'm giving you game in a 3 main edges. This was the reversal that I wanted to tell you about. Okay, and we are on the We're on the hour time frame, so I want to make sure you guys are with me here. So understand, the stop goes below, whether you're doing a trade to the upside reversal or a bottom trade reversal to the downside. Stop above. All right, now number 2, which is one of my favorites. All right, we're going to talk about the bounce. Okay, the bounce. So listen, my thought process: are we in a clear trend on a higher time frame? All right, don't bounce and chop. All right, is the pullback coming into VWAP or the anchor VWAP? Right, or my 21 here that we have, the gray line, the 21, this green and red line is our Bollinger Bands. Here's our VWAP. Now we're going to be using this culprit here. Soon as price got above our VWAP here, what do? We continue towards the upside. Once we got that bullish engulfing, the same we talked about before, how this candle takes out this candle, we get a close above it, close above the 21, like an ATM, all right? The 21 is one of my indicators that I like to use, right? It's all I need sometimes to get a good closing probability high setup, a high trade setup, right? Where I'm going to get good conviction only if we get volume and only if we get a close above the 21. That's how that works. If the volume is decreasing on that pullback, low volume, right? Like right here, this is the pullback. Price went up from here. This is the pullback. So I'm waiting for us to find what? Some sort of higher low. Has to make a higher low. If this price here, I'm going to show you. If this price here stops here and it's higher than its previous low, then that's considered a higher low. The pullback is right here, from here to here. That's the pullback. You understand? But if it's on low volume, it might weak and we can continue to the downside. But it wasn't. We have volume that came in, obviously, because we went up. This has already happen. All right. So another thing to think about is price showing a stutter, small candles, indecision at that level. Is it doing that? Right. So entry, I want to see price slow down, consolidate briefly at a level, and then print in an aggressive candle back in trend direction. That aggressive candle is the market telling me someone big just stepped in, and that's what you guys see right here. All right, someone big stepped in this area right here. Okay, someone aggressive stepped in and they bought that pullback. All right, it's possible that you could think somebody with a lot of money stepped in, because when we went all the way back this way, even broke these highs here at this previous liquidity zone here. You understand what I'm saying? So that's what I want to see. All right, a prior swing high right here. Somebody got the prior swing high. We broke those gamma level walls here right there at 640. All right, we did a video on that a couple of weeks ago. Make sure you guys check out that playlist. All right, that stuff will be down below in the description. But we broke here and we continue higher to make new highs. Now what's your risk? The risk is below the bounce candle low. Clean, simple, no drama. All right, right here. Stop loss right below here. When you enter, once you see the bullish engulfing, you see the bounce in a higher low with volume. We in a trend, right? Trend up. That's the entry. All right. And look, if price blows through your bounce zone, that's information. Now you know the level is weak. The market shifted, respect it, and move on. Possibly take a reversal trade towards the downside. All right. That's just a little freebie. All right. Now, which is obviously a good segue into the next third trade that I have for you. All right. Which is what? The breakout pullback. All right, the break and retest, the breakout pullback. All right, this is one of my favorite ones. All right, the chart is showing a clear breakout, then a clean retest of the broken level. This is one of my favorites. All right, why do I say that? Because obviously you want to never chase, and it helps you not to chase. All right, so think about it like that. All right, and it's the most disciplined one, because also you have to let it breathe. Price breaks a significant level, a prior high volume low. We already talked about this. The same setup, guys. VWAP structure, higher lows, breaking structure, right? So, but it's with real volume at certain levels. It's with real volume, right? So institutions just committed. Now you wait. Why? Because the VWAP, right, or the TWAP, right, time weighted volume average, algos don't just blast through, they execute over time. And retail traders who chase the breakout, they're about to get shaken out on the retest. That shakeout is your entry. When they get shaken out is your entry. And I'm going to show you how that works, whether to the downside or the upside. You're gonna see that. All right, you're gonna see how that works precisely. Here's the process. Here's my thought process. Write this down and remember this, okay? Now, obviously, you want to think, did the break happen on expanded volume? Always check the volume. If the volume was low, you're skeptical, but you're waiting for a different outcome. You want to watch and be patient. If the gamma flip at that broken level, now acting as support. Study that gamma. The gamma flip is very important. Prices above it, bullish. Price below it, bearish. The gamma flip, remember that, all right? It's price retesting with declining volume or small candles. Perfect. Institutions aren't running, they're holding. Again, it's price retesting with declining volume on small candles. All right, perfect. All right, institutions are probably holding. Last but not least, are iceberg orders visible on the tape at the retest? Big passive bids sitting there, someone defending that level. You want to see bids on your option chain. All right, you want to see bids on your option chain. All right, your entry here on the break and retest. I want to show you here on the break and retest. Okay, on the break and retest. All right, it shows you rejection, Rick, or a bullish engulfing or a bearish engulfing. Then I'm all in. I scale in if I see that tape confirmation. If I see that volume and I've already predefined my risk and I understand the structure, then I'm in. Passive bids absorbing the pro. We pushing the market. We're in. We're being aggressive. We're using OCO orders. One cancel the other. Right. This is the example right here. And we're entering in, all right? And I'm going to show you the option chain, but right here, you're going to see this is one of the breakout retests that I like right here. Okay. Also, I want to show you another one. I'm going to use one, let's see here. Okay. All right, let's use this one here. I like this example here. Okay. Now I'm going to put a horizontal line. Horizontal line is going to go where the retest is going to be. Okay. That's the retest. Where's the breakout? All right. The breakout is right here. All right. We already seen the breakout. The breakout has went this way. All right. We see that. Okay. So if we're breaking out like this and we understand that, then price did what? We broke out of this level. Broke out of this level right here. And we came back to retest, breakout retest. All right, we talked about this before. It's a breakout retest. Okay, all right. Just based off that alone, right? Based off that alone, you could have what? You could have bought that dip at 703 and rode it all the way back up to 710. That's a $7 to $8 move. All right. Same thing. We went up again, rejected, and came back into that same spot. Breakout retest continue to play out. All right. Look at there. Okay. Not only that. But there's another breakout retest, you know, similar, kind of hard to see, but I'll point it out to you. Price broke out from where? Right here in this area here. We broke out. All right. We have another what? We have a breakout and retest of this zone right here. All right. If you had bought right here at 710, the same area to here that became profit taking, you would have got a push all the way to 722, 723. An even bigger move than a $7, $8 move, a $10 to $12 move. And that's what I want to tell you guys. That's what you need to understand. Price retest the breakout level. That shows the rejection wick or a bullish engulfer or bearish engulfer. I'm all in. My exit is going to be that major move from the base of the breakout, like I showed you, or the next major high volume resistance. And I haven't even put on here the volume profile for you guys to see, but it was still there. All right. It was still there. All right, here's the high volume node, and we're bouncing right there. You see what I'm saying? Your risk, what, is back below the breakout level. And so in all these scenarios, all right, if you had taken each trade here or there, your risk is below the candle. All right, look how much risk that is. Not much risk based on the setup and the trade and the thesis, right, on what we're thinking about the structural trade. For the reward to be that much, the risk is right below your entry candle. Make that simple, guys. I hope that you're making this simple, because it really should be. All right, and when you're trading options, all right, here's the option chain on Thinkorswim. Over here to the right, what you see in parentheses plus these numbers here are as much as the trade can go up in a dollar amount. So 735 plus these numbers is what spot can do up or down. And we have expiration date, so you can trade the future. If you're trading a higher time frame, you believe a price could go in the future. For example, July 31st is 52 days away. You can click on July 31st and choose a strike that you did your homework on, and you can go place a bid for that strike, 741 for example, and you click on the ask here inside the option chain, and the order ticket pops up. Okay, and it's going to be defaulted for 10 contracts. All right, you deal with 100 contracts per contract when you're dealing with options. That's why you see 100 SPY 100, because in the option world we get to get 100 contracts, 100 shares for SPY at a cheaper price, as you can see here, for $1,600. Usually, 100 times 735, that's a lot of money. You do the math, but I get to get it for $1,600, 100 shares, leverage and cheap, buying the option, right? And I can buy as many as I want, but for the example, we're doing one. You choose the option and you can place your order here, and there will be a gamma in the order video later. This was just the 3 edges, right, for my beginners, intermediate, and some advanced. Okay, place your order, and the order pops up, and you want to try to get the midway of the bid. You want the lowest price always if you're convicted. If price continues to move, then you want to try to get the mid price or the ask if you're convicted. All right, and always think about risk, entry, exit, and risk. And I do a deep dive on this option chain because this is where I buy my money, here in the option chain. Of course. All right, and we got a little bit of fear and greed. All right, the fear mark is at 33. Interesting. All right, the market has been very interesting. We have had a lot of explosive moves, and right now the market had dumped today on the 9th of June. All right, and now we're already trying to do a V-bottom reversal, do a reversal here. So we have a lot of things to think about, of course. And just remember, guys, that this is a mental game, all right? This is a mental game. Hope that you found some value. Here's what nobody wants to talk about, all right? Take a walk with me, man. Smash the like button if you enjoyed this video, all right? But take a walk with me. Nobody wants to talk about this, but you can know all three of these setups perfectly, right? You can know them all perfectly and still blow your account. Because when you take a loss, something happens in your brain. It's called in trading the now moment. But most traders can't get there because they're still carrying the last trade into the new one. That's a tilt. And tilt is expensive. Tilt sounds like I need to make that back. I need to make some money. I want a revenge trade. Oh, I need this for my rent. This setup has to work. Have you heard this before? I'll just size up this one time. Sound familiar? Right. So here's what I want you to do. I want you to define your entry, your exit, and your risk before the trade. Write it down. Not in your head, but on paper, because your brain under pressure will rewrite history. The paper won't. This is exactly what I do. I go deep in this on my book, The Power of Patience. All right, that's what I do. The power of patience. The edge isn't just the setup. The edge is waiting for the setup to come to you, not chasing it, and you have to execute it, which takes repetition, practice. Paper trade with fake money. All right, get used to the setup so it'll help you, and then do real money. You need to see how it feels to lose. You need to do this, guys. Take this serious. All right, the link is in the description if you want to join the community. All right, if you want to check out some more valuable content like this, I do updates on SPY, IWM, QQQ, and the broader market, period. Tickers like Amazon or Tesla or PLTR, Palantir, Amazon. Like I said before, these are the things we do. This channel was built off of option trading, mental toughness, right? How to execute and really find a consistency. And this video has been for a consistent, right? Consistent 3 edges, repeatable edges that you can use all the time. So I hope you guys enjoy this, right? Let me leave you with this. The market won't open tomorrow and the day after that, and every single day it's going to be open. It's going to offer setups. The question isn't whether the opportunity exists. The question is, will you be ready? All right. Will you have done the work? Will you know your levels before the price gets there? Will you have your entry, your target figured out? All right. You need to know this. All right. That's what separates the 10% from everyone else, not the indicators, not the special strategy. The preparation and the patience prevents poor performance. I've given you 3 repeatable edges today: the reversal, the bounce, the break and retest. Now go back to your charts and you find them, guys. Go back to your charts and you find them. I gave you these trades today. I show you what really matters. I showed you that, right? Are we in agreement with that? I did. I've given you all of them. Find those charts and don't force them. Find those trades, all right, and let them come to you. And listen, I appreciate every single one of you who shows up to this channel. You could be anywhere on the internet right now and you choose to invest your time here. I don't take that lightly. That means everything. So do me a favor. If this brought any value to you today, hit that like button and subscribe to the channel if you haven't, and drop a comment below, all right? Do that for me. Drop a comment below, because this has been a ride, all right? Tell me once one of these 3 setups you trade most or you would like to trade, all right? And I talk back. I read every one of these comments, so don't worry there, all right? And I'll see you guys in the next one. Remember, stay patient, stay disciplined. The market owes you nothing but it rewards the prepared, all right? Peace.